Good morning, everyone. Time for another precious metals update. My name is JR, and today is Monday, October 27th, 11:27 a.m. Eastern Standard Time. Quick analysis, not much to report. I mean, market has really been flat here. I believe we're waiting for the FOMC meeting here this week. They'll be announcing if they're going to print more money or if they're going to completely stop quantitative easing. If that's the case, we'll have to see how the market reacts, but I think the reason why the market's been so flat is really because of this meeting. All eyes will be on this meeting. This is your monthly chart here. Just go over a couple of these technicals. Currently testing this 20-day moving average. Now, usually when you test this 20-day moving average, what you're looking for is a new low or a new high, kind of similar to this. So when the market is running up, you see a test of this 20-day moving average. These are the highs and lows as well. 20-day moving average of highs and lows as well. So you want to see a move like this. It'll come and test it, and then you create new highs. And this is where we are on this end here, right? So basically, trading flat here, right? Trading flat here, but we had a triangle here, right? And then it kept testing this 20-day moving average until it popped to the upside. Again here, flat, right? And continue to test this 20-day moving average and continue to go higher. So what you're looking for is you're looking for a break of this, or you're waiting for a break of this. So if this breaks, chances are you're going to see a big move to the downside. Maybe around I would imagine you'll find some support over here. We had a really nice rally that started here. So this is actually a confluence with this Bollinger Band. So I would probably say you'd find support between 1050 all the way up to 1130, and that's based on this monthly chart, right? Now, technically speaking, you can possibly fall a little further, maybe to the low to the low $1,000 range. And the reason why I say that is because, again, technically, this triangle would represent a move of at least the size of the triangle. So at least you would expect a move from this size, right? So let's take this and put it right here, and this is what you're expecting. You're expecting a move at least this size. But you have to keep in mind that this is not just a technical trade here. This is also precious metals, and you also have to keep in mind that there are production costs to this metal. So the odds of this thing going down this far, if it breaks this level here, I would say they're pretty low. But in the same respects, we're looking at this as a technical level here, not as gold. This is just technicals. But again, I wouldn't expect the market to come down this far. I would probably expect it to find some support over here, and ultimately find some support, and then within the next coming maybe 6 or 7, 8 months, come back up. That's your weekly chart. Your daily chart here, same thing. Have a flat line here, have the triangle here. Currently, you have a nice bullish candle here. This is an outside day candle, a positive outside day. This should target roughly 1278. My target on this, as long as we don't create another low, or as long as we create as long as we don't create another low, or a heck of a false breakdown, meaning a move to the downside, it was false, so you have a very fast move to the upside. My target on this would be, the first target obviously would be 1290. Once we surpass 1290, then my next target is probably going to be around the 1400 range. Okay, based on the technical, based on these technicals working out, right? That's your daily chart. Okay. So right now, I really like gold. It looks like on the daily chart here, and on the weekly chart, your stochastics are still pointing up. So there's still a chance that the market might continue to go up. Also, it's starting to lose a little bit of momentum, but again, I think we have to be very patient with this market, simply because I think right now we're just waiting for this meeting. So the market is probably going to continue to trade a little funky, a little sideways maybe, right? And again, what I was saying with this 20-day moving average, that's what we want to see on the monthly chart, right? So on the monthly chart, what we want to see is we want to see a move above this 20-day moving average Right now we're testing this 20-day moving average. We want to see above this move to this above the 20-day moving average. Then what we'd like to see is a move coming back down. Maybe retest this line here. That'll be a confluence with the 20-day moving average. By then, the 20-day moving average should be instead of pointing down to maybe around 5 o'clock, it should be pointing to around 3. Hopefully start to curve up, and that's what you want to see. You want to see a confluence between lines, and you want to see a confluence also with this 20-day moving average, right? So at that point, if this breakout is true, then you'll have a big move to the upside. If this trade, if this breakout would be false, then you would have declining. You would have this metal declining much further, simply because it turned out to be a false breakout, right? So again, similar to this, if this can possibly come down here, turn out to be a false breakout and can take out higher, I always say that false breakouts usually lead to big moves and fast moves in the opposite direction, right? So on the daily chart, we've already have the move. We tested this 20-day moving average once, twice, 3 times. So the more we test it, the more likely it is for us to take it out. We took out the 20-day moving average here, as we can see. Okay, now we're coming back down and we're seeing how serious this this move is, right? So again, based on these technicals, I wouldn't necessarily like to see this market go below this area. This would be your last opportunity if this is a real rally, and if this rally is going to continue to go higher, I would say that this is your last opportunity to get involved before this market takes off and does something like this, right? But as of now, sideways, currently testing this 20-day moving average. Like I said, we have the curve. We're still above the 20-day moving average, and at this point, we just want to see if this market is going to come down here to the zone here. That's my zone. All right, between 12.21 and 12.17. I don't see why we should fall below that. Sometimes when these FOMC meetings come about, the technicals kind of erase a little bit, and you have moves that, let's say, will take out a lot of buyers, and then next thing you know, it'll come down here and then it'll just take off. So really just patience is what we require at this point, and see what this market is going to bring us with this FOMC meeting, right? But technically speaking, this is a buy zone, 12.17 to 12.21, okay? If this rally is real, this is where you want to get in, and you want to come out here. I personally think it'll come up here easily to the 1330 range very nicely. At least between now and December, it should rally to the upside. Silver, okay? Silver trading within this range here, not as bullish as gold, but still fairly bullish. You have a very nice engulfing candle here, okay? This is a very nice positive candle. You did see the move to the upside. Went up above the 20-day moving average for a little bit of time, came back down, now is above the 20, then it came back above the 20-day moving average, and again, retesting this 20-day moving average. Now this level has been tested. This was a zone here that I drew, and now this would be the zone. If this market is going to be a bull market for the next coming months, you would need to get in here, I would probably say between the 1670 and the 17 range. Now, here are your Bollinger Bands right here, roughly around 1695. A move below 1695, I would probably call this danger, but again, this is your zone. If this market is going to go up, it needs to do it without creating another low. It needs to do something like this and start creating new highs. That's your daily silver. Monthly, also on silver, we are looking for a close above 1820. A close above 1820 would be a positive piercing pattern, and at that point, then you can target much higher, maybe around 20. I would probably target between $25 all the way down to $25 all the way down to 22. So if we end up closing above 1820, that's going to be very positive for the metals, for silver. All right, we've already tested this 20-day moving average a few times as well. So what we want to do is we want to move above. Okay, we want to move above here, come up here, maybe come back down, retest the $20 level of this 20-day moving average, and then that's when you're going to see the big move to the upside. That's your monthly chart on silver. Weekly chart on silver. Now, for the weekly chart, we've already created that piercing pattern that I'm looking for on the monthly. Okay, here it is. All right, a piercing pattern. We closed above 50% of this candle here on this candle. So this candle didn't necessarily engulf this candle, but it did finish up above the 50% level of this candle. That's very positive. And at this point, we just have to see if this is going to be a false or valid indicator. If it is going to be a valid indicator, then I would target easily $19 as the first target, roughly around this area here. This would be the zone that I would be looking to test. Okay, between $19 and $20. Okay, $19.95. And of course, we're going to find some resistance as well with this 20-day moving average. And I've already gone over the daily chart here. Let's go over the Dow. Okay, Dow Jones right now, finding some resistance here around this level here. I gave some really accurate predictions of this market here. Okay, this market actually found some resistance here. Actually, not here. Here. Okay, this is your zone, and it actually hit the zone perfectly, and then it took off. Right now, this is your zone. Not a big, strong zone. Anytime you have these big candles, they're not necessarily good indicators. But this would be a zone here, and if we break this level here, which we've already broken, see again, kind of like the gold trade. Right now, we're waiting for confirmation. What you want to see is you want to see this 20-day moving average. We just broke the 20-day moving average. First time testing it. Actually, we tested a few times up here. So we want to see a move up here. And then you want to see if this 20-day moving average is going to hold. If it doesn't hold, then I would expect a deeper penetration down to maybe this area here. This will be your next zone. I would probably say between this level here, and this is on the daily chart, right? So this is where you would look for the market to find some support if this 20-day moving average, now that it's above it, if it fails to hold. Because now the market needs to go up here, maybe around this area, the 1740 range. It needs to come back down, test this 20-day moving average. If this 20-day moving average will hold, then we expect higher prices in the market, the Dow Jones. If it does not hold, or it could just come down from here, who knows? Again, sensitive market, FOMC meeting coming up soon. Last thing I'll touch on is the US dollar. Here's the US dollar here. Currently testing this level here. I don't have the same indicators that I do on the other chart, but you'll get the picture. So this is the first level here. Currently we are this level of resistance. So you don't necessarily want to go long dollar because right now it's hitting a very significant level of resistance. But you have very nice movement to the upside here, surpassing this level here. This market can easily turn around and come back down here to the 80 zone. If that's the case, I would assume that precious metals are going to continue to go much higher. And again, my target of 1350 to 1400 on gold will be surpassed if this market comes back down. But the dollar is very strong. Currently testing this level here between 86 and 88. It's going to be hard to get across. Then you have this level here. This is going to be another level to look out for. Then you have this level to come to surpass. Then you have your next level is this one, followed by this one. So these are all your levels. So again, the dollar has a little bit of resistance, but again, it still has room to climb. And what we don't want to do is we don't necessarily want to go above this level, the $88 level, or even this level here. Because the reason why I say that is because this market, as of now, is still in a downtrend. Why do I say still in a downtrend? Because we can clearly see that this market it's just rebounding, and right now it's just trading sideways. Yeah, you can say it's on a short term, on a short term bull market, but ultimately this is a very, very, very bearish trend. You're creating new lows. You're creating new lows. The highs are getting lower, right? But the lower are not necessarily getting lower, and that basically would suggest that this is sideways consolidation, very similar to gold on the long-term chart, where again we're not creating new lows, but the highs are getting lower. So you're going to see probably see if this is going to be a false breakout to the top and then possibly come back down even further, which is what I would expect. I would expect this market to find some resistance here between 88, 60, and 86, which it already has found some resistance at around those levels. But this is definitely the key level here to look after, the $92 to $94 range. This market continues to go above this level, and it could be very bullish for the US dollar. Okay, but the US dollar as of now on the monthly chart still bearish. Currently sideways consolidation here on the monthly. On the weekly chart here, same thing. Right now this looks like a false breakout, and this is the level. So you have this piercing pattern again, just like gold and silver, in the opposite direction. And this piercing pattern might bring this dollar down to the $83, $84 range, the $82, the $82 range, and possibly the $81, maybe even lower. But if this does turn out to be a false breakout, then you're going to see a pretty decent sized move to the downside here. Okay, and on the daily chart here, we've got to look out for this level here between 86.10 and 86 even. So a move above this level here would probably bring higher highs. If it stays above this, if it stays below this level, then you're probably going to be looking to come down to the $83 level, at least in the short term, right? That's about it, guys. Not really much out there. Just really waiting for the FOMC and seeing what happens with that. And besides that, I hope everyone had a great. I hope everyone has a great rest of the week, and I'll do another video analysis here when the FOMC meeting minutes come out. Okay. Hope everyone has a good one, and hope you enjoyed the video. Bye bye.